Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, health insurance is slowly becoming a must-have in today's time because it protects you and your family members in case of a medical emergency or medical treatment. Insurers are also now coming up with innovative products that work towards the benefit of customers holding these health plans. Now, a cashless settlement policy is a good example which is both customer-friendly and convenient. But to understand them comprehensively, we have with us Yashish Dhaya, CEO of Policy Bazaar. Welcome to Policy Bazaar, Yashish. Now tell me, what is cashless? I mean, we've been hearing this term. A lot of us have it, but what does it mean? Cashless insurance, health insurance.
So when you have a health insurance, when somebody gets sick and they go to hospital and they are admitted in hospital, if you have gone to a network hospital, what happens is you don't ever pay cash. You essentially report the medical treatment that you are having. You kind of register, and as you are checking out, the payment is automatically made on your behalf by the hospital, which then later on adjusts it with the insurance company. So you don't actually have to pay cash, go away, and then claim that money again. As far as you are concerned, you never paid for it. You basically had an insurance cover which paid for your policy, and you're out of there without spending any of your own money.
So step by step, now what are the advantages? Of course, you don't have that hassle of paying that money, you're saying, but what are the comprehensive advantages of cashless insurance?
See, the big advantage of a cashless insurance is the fact that it does not put stress on your own finances from a liquidity perspective. It does not, you don't need to, once you've got a coverage up to a certain limit, you don't need to think about whether that particular disease is going to be cured in 50,000 rupees or 70,000 rupees, as long as it's covered within your health insurance policy, right, and the amount is below your sum assured and below your sublimits. You just go ahead and you don't negotiate with the provider, or you don't kind of find out how much does it cost in other places. I think the important thing that you have to watch out for, as soon as you come to the hospital, you do need to register almost instantaneously. You should not wait further.
So what you're saying is inform the hospital about it.
You need to inform there's a desk out there, there's a TPA desk and there's a registration desk. You go to the registration desk and you register the fact that you have a cashless card immediately, because the moment you do that, the TPA starts his process. And so when you do go for a checkout, the TPA mostly already knows that you're checking out. The insurance company has been in touch with the hospitals. So that process is very, very smooth. In fact, within more than 90% of the cases, the payment can be made within hours to the hospitals. So that really assists the smoothness of the process. Because if you don't inform and you try to create a last minute, you inform and then you try to, it creates a stress at the payment point, which is unnecessary. And that is exactly when you may kind of have to spend. Now, one of the things you got to watch out for is you are going to a network hospital, because if you don't go to a network hospital, chances are
that should be there on the list of the health service provider that you have, or the health insurance provider.
Yes. So see, these keep changing. So when you bought the policy, a certain hospital may be part of the network hospital, but because of whatever negotiations people are having between the hospitals and the insurance companies, that hospital may no longer be part of the network. Also, some hospitals may get added into the network. So at the point when the person is going in for the cure, they should have a quick glance at whether a particular hospital is part of the network hospital or not. You can also check at the registration desk. Most of them would know whether...
So what about the difference between, say, a cashless hospital and the traditional one where you get your reimbursements for?
Yeah. So see, most of health insurance is actually a reimbursement policy. One has to understand, what does a reimbursement policy mean? A reimbursement policy means the expenses that you incur in a particular disease are reimbursed to you. The other kind of plans are called fixed benefit plans. Fixed benefit plan is, you have a particular disease, you get 2 lakh rupees. No questions asked, no bills required. You have a hospital, you're in a hospital, you get paid 3,000 rupees per day, hospitalization cost. No bills required, no questions asked. Those are fixed benefit plans. Basically, a reimbursement plan is you submit your expenses and you get reimbursed. So cashless is actually a format of reimbursement plans where you do not just submit expenses and then get paid later or pay for it upfront. You essentially, at the point of checkout, you don't pay anything, or you don't even put advances with the company, with the hospital. You have informed the hospital you have a cashless card. As long as you're within the limit of those cashless cards, the settlement happens between the insurance company and the hospital, managed by the third-party administrator.
But one has heard many times of a person going and saying that, look, I have a cashless a card, and then all sorts of problems are faced by the patient. Why is that the case? And how does one actually overcome that?
See, as long as you're going to we hear a lot of the negatives. One doesn't hear the positives. So 90% of all health insurance claims in the industry are now being settled within 30 days, even when they are not cashless. As far as the cashless settlements are concerned, the average turnaround time is 2 hours to 6 hours. Is in how much time the insurance company approves the claim, because the insurance company still has to say okay. Third-party administrator has to still say okay to the claim. So the speed of claim settlement has vastly.
So that's something that the patient and the family really needs to understand, and that's where a lot of the complication comes, where
Absolutely.
They're sitting at the accounting office there and saying, it hasn't happened for a long time. I've been sitting here since the morning, and then the entire atmosphere really becomes
Things have
charged up.
vastly improved because of technology and innovation and processes. Things have vastly improved. The new age companies are very, very quick at settling claims and understanding claims, and they've got in-house doctors which are working in TPAs. So it's a fairly streamlined process. The problem is, if you go to a non-network hospital, or if you have a non-cashless policy, or if you do not understand your sublimits. So I may check into a particular place, and I may just find out that for a particular disease, I'm only covered up to 50,000 rupees, whereas that the cure might cost 70,000 rupees. Suddenly one is not covered. One may find that a particular procedure is not covered. So one has to be careful. One has to be constantly in touch with the third-party administrator. For a particular disease, there are multiple cures.
Right.
Some a little more expensive, some a little less expensive.
And then each hospital is different in terms of their rates, isn't it?
And each hospital is different in terms of the rate. So we have not achieved standardization yet. That kind of a negotiation has not happened yet, because the insurance companies are not a very large part of the hospital's overall billing. They're much lower than what it is in the West. So in the US, 60% of all billing would be through the insurance companies. So for that reason, you don't have a streamlined process, and hence you need to always be in touch with your third-party administrator that would you get a particular claim or not get a particular claim, and sort of be on top of that so that there's no surprise in the end. But otherwise you could end up with a surprise that, hey, this procedure is not covered. And specifically, as there are certain diseases which are not covered because of pre-existing nature or because of some permanent exclusions.
Right.
So exclusions of all sorts. Then come sublimits, and then come within those diseases what procedures are covered and what procedures are not covered. So for the same disease, you may have 5 procedures, and 3 may be allowed and 2 may not be allowed. So one has to stay on top of it.
What about in the case of a pre-planned, an operation or a treatment?
Yes.
How does one go about that, and how does the cashless part really work on that?
It's even more straightforward because you got more time. So you essentially again do the same thing. You register at the registration desk. You inform them that I'm coming in for a surgery. Now, if you're not staying in the hospital for more than 24 hours, then you need to understand whether your insurance company covers it as part of outpatient treatment, because most insurance policies only cover you when you have stayed in the hospital for 24 hours. So if you're coming in for a cataract surgery and you're going to be in and out of the hospital, chances are, unless your insurance policy specifically covers OPD surgeries, that may not be covered. So I think understanding a policy before taking it is obviously very important, but also as you're going in for the claims process, to not get any surprises, it's good to stay in touch with your TPA.
So is that the reason why there's so much of a confusion in understanding what a cashless policy is? Because people are really not aware of it. But even hospitals, there is a lot of confusion within. At least there's no clarity from the hospital side about what is covered under a certain health insurance plan, if you know what I mean.
See, it is a complex product. There is no doubt about it. But the insurance companies have put in a lot of effort in trying to come up with somewhat simpler policies, somewhat non-abnormal policies, somewhat policies where what a customer expects is mostly what he gets. But yes, there are certain pieces like 24-hour being in the hospital, which is a standard part of most health insurance policies, and you also have certain sublimits. Now it depends which kind of policy you are taking. as the policies tend to have sublimits, they also get cheaper. So you've made a choice in terms of cost and sublimits. And one's got to be conscious of those. One has to also understand the pre-existing diseases, because pre-existing diseases are usually excluded for a period of time.
Right.
One has to also understand the permanent exclusions.
Thanks, Yashish. And of course, we're going to continue this discussion after the break. We'll also take viewer questions, but you can write on ask.policybazaar.com and you can tweet us on Twitter at @policybazaar_in. Yashish, how do you choose that perfect health insurance plan, the cashless health insurance plan?
Basically, what you do is you decide how much of a cover you require, who all you want to cover. Then when you look at policies, you of course look at a policy. Now all policies continue until lifetime. You look at the pre-existing diseases that they have, exclusions that they have, permanent and temporary exclusions. That's very important. You look at, do they have any co-payments and sublimits? So co-payments are when you have to pay a part of the premium, a part of the cost that comes in, or sublimits are certain diseases are capped. You see, do they include OPD? Do they include, any other kind of hospitalization payment, etc.? You essentially also look at the product features that they include within itself. So how quickly they settle claims, that the companies record in terms of settling claims, which is the TPA. Network hospitals, very important. You look at the particular hospital you are likely to go for a which is close to you. Are they included in the network or not, hospitals or not? And have they been so for a while? I think those are the kind of things you look at. You make sure that they give you a cashless policy. If they're not giving you a cashless policy within the network hospital, then you got a problem.
What about the coverage that one should look at? Because, every year the costs are going up as far as healthcare is concerned.
Yeah.
What would an ideal cover be for, say, a family of 4?
So it totally depends on what age group, what income the people are at. But a broad rule of thumb is about 1 to 1.5 times of income, limited by an upper cap of maybe about 10 lakhs or so. It used to be about 6 lakhs till about 1 year ago, 1.5 years ago, but about 10 lakhs or so. After that, you should go for critical illness plans and personal accident plans, because after that, the costs are likely to come in from critical illness plans. You could also go for loss of income plans, because some of those, you do have a loss of income when you're in hospital, and the loss of incomes can make up for those periods.
Right. And what about in case of a person having multiple policies, 2 policies from different insurers, health insurance policies? How does he or she go about getting those claims?
Sure.
If one is cashless and the other is not, I mean, how do you balance that
So
equation?
the essential difference between a reimbursement claim and a fixed benefit claim is that in a fixed benefit claim, if there are 2 policies, you would get paid both of them to the fullest amount of the payout. So if there were 2 5 lakh rupee policies, you get 10 lakh rupees. However, in a reimbursement claim, you cannot get paid more than what you have lost or what you have spent. So essentially, if you have 2 policies, one for 3 lakh rupees and one for 2 lakh rupees, and you have a claim of, let's say, 2 lakh rupees, then one of them will pay 60% and the other one will pay 40%. Now, if one of them is a cashless one, that will get settled cashlessly, and the other one you would have to pay for and then claim separately. That's the basic basic rule of reimbursement is you cannot get a benefit more than what you have spent. And of course, whichever one is cashless, you will get that as a cashless, and they have to be split. So ideally, one should not have 2 health insurance reimbursement plans. It does not help.
Doesn't really make sense.
It doesn't really make sense. It'll add to your confusion, because you'll be kind of, if one of them decides not to pay, you got a problem. The only reason you might do it is if you have one and that particular one is not increasing, but you want to continue the plan, and for a short while the pre-existing diseases continue, you may want to take a second plan for a while as a transition into the kind of next plan. That's a feasible option, but otherwise, really no.
Right, Yashish, we've got viewers' questions. We've got Jitendra Day from Howrah, and he writes, he wants to know about a good family mediclaim policy. He has a family of 4, and he has a salary of 1.5 lakhs a month, and he's 57. His wife is 50, and his daughter is 15. What are some of the options?
So, first of all, he should take separate policies for every individual in his family. When you get to a age of beyond 50, even the husband and wife should take separate plans.
So the family floater is not something that you
I would not advise a family floater. The gentleman is 57, his daughter is 15. 20 years from now, or 15, even 10 years from now, they're going to be in very different age brackets, very different disease brackets. And I would certainly suggest that they go in for individual plans for each individual, because if he develops a disease or he develops certain illness, that should not impact his wife's policy, and that should certainly not impact their daughter's policy. So I do believe they should go for individual plans versus a family floater is usually for young families. Going into the 50s, you should separate out your plans.
Right, we've got Akshay Agarwal from Mysore. He's 30 years old. His annual income is 11 lakhs. He says, I want to purchase an online term insurance plan of about 1 crore. He is considering Aegon Religare, or he says Aviva or Bharti AXA. Which plan will be better in terms of claim settlement ratio, he asks. Aegon Religare is providing coverage up to 75 years of age, but CSR is less. How should he go about deciding that? There is a lot of choice, and so it's a feasible question in that sense.
So I think there is a lot of choice out there. I think you should not just look at premiums, because the premiums of the first 4 or 5 plans in the market, so if you look at Aviva and Aegon, a Bharti AXA, a Tata, these plans are priced about the same. A Reliance or an HDFC is not priced too much higher. So from a price perspective, quite honestly, somebody who's willing to spend 10,000 rupees can also spend 12,000 rupees. So there's not that big a variance left in the market any longer in terms of price. I think you got to think about structure. You got to think about what are the add-ons you're getting. You got to think about what is the way you want to get your benefit. I strongly recommend the income benefit rather than the one-time benefit. See, you could get 1 crore rupees in one go, or you could take 50 lakhs now and get paid maybe 50,000 rupees or 80,000 rupees over the next 10 years or 15 years. That is a much smarter way of building a term plan. Remember, when somebody is taking a term plan, one is largely taking it for their dependents. And the dependents are dependent on the income. Of course, a little bit of funds would be necessary to put life back on track. But having everything in one go, suppose the individual has a child who is 6 years old today.